You know what's wild? Most people have no idea what actually happens between I want to buy a house and getting your keys. And I get it. It's confusing, it's technical, no one's really explaining it clearly. So in the next 8 minutes, I'm gonna break down the mortgage process in plain English. That's right, no fluff, no sales pitch, just the facts you actually need. My name is Ty Bennett. I'm a mortgage loan officer here in California, and I'm here to turn your confusion into clarity. Let's get it. All right, now the first thing you're gonna wanna do, the very first thing, now this is before you talk to a lender, before you talk to a real estate agent, is you're gonna wanna create your own budget. Ask yourself, what can you comfortably afford spending each month? Is that $3,000? Is that $4,000? Is that $5,000? You wanna come up with that number first, because the truth is, the lender that you choose isn't qualifying you based on your personal comfort zone budget. You know, we're qualifying you based on the maximum amount you can afford according to guidelines. We're not looking at things like groceries, car maintenance, babysitting, daycare, gym memberships, or your Netflix subscriptions. If it doesn't show up on your credit report, we're not factoring it in, but you're still responsible to pay for it. So before you do anything else, get really clear on that number that you're comfortable to spend on a mortgage payment each month. Now, one way you can do that is you can use an affordability calculator. They have one on nerdwallet.com, their website. And what you can do is enter in some information, your pre-tax income, debt payments, recurring expenses, you know, some loan info. You can either even go to some other more in-depth cost, property taxes, homeowners insurance. But basically, let's just enter in something. Let's say we're comfortable with a $4,500 mortgage payment per month. Okay, so at $4,500, with all these things staying consistent, we have a home price of $580,000. So now you can take that budget of $580,000 a month and you can give that to your lender. That way he can structure the loan around what you can afford. You know you want to be at $4,500 a month with a $580,000 purchase price. Well, here's where we need to be as far as down payment. Here's where we need to be as far as credit score. You know, and you can build in you can fill in the rest and build around that versus just going in blind. So this is a very important step. Do not sleep on that step. So the very next step after that, once you figured out your budget and you got that locked in, now you're gonna wanna get pre-approved. This is basically a lender saying, hey, we've looked at your finances. Here's what you can qualify for. Now, in order to get pre-approved, we're gonna need to see some documents. Now, the type of documents is gonna vary based on how you earn your income. Are you W-2, are you self-employed, 1099? Whatever it is, we're gonna ask you for those documents, what that may be pay stubs, bank statements, tax returns, things of that nature. And we're going to also pull your credit and calculate your debt to income ratio, or your DTI. I'm gonna go over DTI in another video more in depth about how you calculate it, what's the front end ratio, what's the back end ratio, what ratios are generally accepted. But that's for another video. So once we have everything, we'll run all of these things through our system. And if everything checks out, we'll issue you your pre-approval letter. So the pre-approval letter is going to tell you how much you're pre-approved for. Again, that's the maximum amount, not how much you're budgeted for. So in our example, we budgeted for around a $580,000 house. You may be approved for $600,000. All right, so now you're pre-approved. If you're already working with a real estate agent, this is when we'll send that pre-approval letter directly to them so they know exactly how much you qualify for and can help you shop within the right price range. From there, you and your agent will go house hunting, you'll look at homes, you'll narrow it down, what do you like, what do you don't like, and you guys will put in an offer. Now, once that offer is accepted, boom, we're in business. Now we're going into the full loan approval phase. First, we take your signed purchase agreement and we submit your loan to the lender. If you're working with a mortgage broker like myself, this is where we're gonna shop your loan, we're gonna compare it to multiple lenders and find you the absolute best deal in terms for your situation. If you're working with a bank or credit union, that'll all be done in-house with their own programs. Now, once that file is submitted, it's gonna go to an underwriter. They're the person that's gonna review everything, make sure that it meets the guidelines, your loan meets the guidelines. And if everything looks good, they'll issue you a conditional approval. That's basically just a checklist of things that you're gonna need to take care of before you get that final go ahead. It can be things like proof of homeowners insurance, updated bank statements, or more recent bank statements, or maybe it is a letter of explanation for something in your credit report. Whatever it may be, these are the conditions that have to be completed in order to get the final go ahead. Around this time, we'll also order the appraisal, which confirms the home's value, and we'll do the title search, which makes sure no one else can claim ownership of the home and that there aren't any unpaid property taxes or legal issues that could follow you after closing. Once all the conditions are checked off, the underwriter is going to give you the final clear to close, which means you're good to go and you're almost at the finish line. So now what happens next? Well, first you'll get something called a closing disclosure. This is a final breakdown of everything, your loan terms, interest rate, closing costs, cash to close, all of it. You'll get this a few days before closing too, so you'll have time to review it and ask questions if you have any questions. Then on closing day, you'll go in and you'll sign your final documents, either at a title office, escrow office, or sometimes remotely. Now, once all the docs are signed, the funds are going to be transferred from the lender, the sale is going to be recorded with the county, and you're officially a homeowner. Your agent will give you the keys, you'll celebrate, it's turn up time. And remember, the first mortgage payment isn't due until about a month after closing, so you'll have that little breathing room, just a little breathe. Everything is okay, man, you're a homeowner. All right, so that's the full mortgage process from start to finish. I know it can seem like a lot. If you're doing this for the first time, you're like, hey, this is so much, but I'm gonna be making videos like this, and my job is to make sure you actually understand what's going on and you're not just signing a bunch of papers and hoping for the best. Links are in the bio.